I think that Riyadh is committed to its decision to increase oil output. I think that they're looking at oil forecasts that are not as dismal as those that the IEA and the EIA are looking at. OPEC's forecast really doesn't have as depressing a demand outlook as some of the others. And I also think that they are seeing kind of the facts that they can make more money producing and selling more oil, even at slightly lower prices, than they can if they try to constrict supply, or at least constrict OPEC supply at this point. And so they are definitely looking to make more money. And I think that's really where this is coming from. Unfortunately, it seems like things are looking pretty depressing price-wise in the fourth quarter here, but going forward into next year, it may not be quite as depressing from a price perspective.
We're here with Ellen Wald, an incredibly busy morning, kind of fueled by comments from the President of the United States on Fox and Friends talking about the shooting of Charlie Kirk, but a number of other issues as well, including the fact that he's growing frustrated with President Putin and anticipates putting more sanctions on Russia. And that's where I want to go with you next, Ellen, as I look at this exclusive from Bloomberg News this morning about the U.S. poised to urge others in the group of seven, the G7, to impose higher tariffs on China and India for the oil that they've purchased from Russia. What is the larger effect of that likely to be? We had Terry Haynes on here a few moments ago, and we talked about kind of the political impact of that, what that might be, the effect it might have just in the trajectory of the war. But stepping back to look at the broader energy market, if the G7 does do this, put these secondary sanctions in place, what does that mean for the price of oil broadly?
I mean, what we're looking at, I think, is a further bifurcation of the oil market into basically kind of this closed system between Russia and China, largely, and Iran also, and a few other things, some from Venezuela, and then a couple others. India is not going to be able to stop buying Russian oil entirely, though they may cut back somewhat. But we're almost looking at this closed system, and then this other, and then everyone else. And that can have an effect on prices, namely that if the prices in the closed system are lower, that's going to impact the prices all over the place. We're not going to get Russian oil off the market. The question is, are they going to be able, is there any way to keep Russian oil on the market, but cut into Putin's revenue enough that it would impact the course of the war? And I honestly can say I'm not sure that that is actually possible. They've been trying and trying, I guess for some time, and I think that unless they're actually willing to bear the pain, the price pain of really getting Russian oil off the market, I don't think that these plans of just getting them, well, just stop buying so much, are really going to work. They're never going to cut Putin's revenue enough to actually get him to stop or to pull back in the war effort.
Ellen, we were talking over the course of the week about advancement in AI. Obviously, the Oracle news from this week sparked a lot of that conversation. And something we've brought up time and time again is just the rising cost of electricity prices in this country. As we've seen the demand for the computing power that's the backbone of AI really escalate. What is your sense of where all of that is heading, as so many of us look at our electricity bills and are just startled to see the kind of leap on a monthly basis that we've seen so far? How does this all shake out as you see it?
Yeah, I think that this has been coming for a while. I mean, back in 2021, we saw the traditional patterns of electricity pricing start to dislocate. It used to be, very, kind of cyclical. Prices would go up in the summer, go down in the winter, and then right in 2020, 2021 is when this pattern started to break, and we never saw prices going back down. And now we're at a point where utility companies have to increase rates in order to pay for all of this new demand for electricity. We need more power plants, natural gas most likely, but we need more electricity across the board, and that means more power generation. We need more transmission lines. We need better transmission lines. We need more hookups. We heard from the largest utility company in Texas. They reported that in 2024, 25% of their requests for new hookups came from data centers. That's massive. And in order to pay to upgrade the system to be able to handle all of this, they're increasing rates on consumers. And so this is where this is all coming from.